publicly traded business development company, commonly referred to as a BDC, and they make debt and equity investments.
Hey there fam, what's going on and welcome back to our channel. Dividend stocks appeal to many investors because they provide a consistent stream of income that's unaffected by market fluctuations. A company with a long history of dividend payments is also more likely to keep paying its monthly dividend. Because of this, monthly dividend stocks are particularly appealing. Unlike most other income investments, these pay out every 30 days rather than every quarter. So let's check out the top 5 safest monthly dividend stocks to buy before the crash.
To thank you for watching this video, we're offering you an absolutely free training webinar. Have you ever wondered how to end procrastination and self-sabotage so you can unleash your full potential to live the life you deserve? #1 best-selling author and high-performance coach Peter Sage is hosting a free webinar where he'll teach you how to increase your wealth with less time and struggle, and also how to hyper-boost your growth and success so you can finally break out of any rut you find yourself in. Right now, Peter and his team are offering a free $100 gift to anyone who doesn't find his webinar as the best use of their time within the last 5 years. Now, let's get back to the video.
Number 5. Prospect Capital Corp, PSEC.
Prospect Capital Corp is a publicly traded business development company, commonly referred to as a BDC.
Prospect Capital is a monthly dividend company that invests in other businesses and pays a percentage of the profits to its shareholders every month. And, according to Wall Street, the PSEC portfolio has recently shown a lot of promise. Share prices have increased by more than 60% in the last year, and the stock has surged by more than 85% from its 52-week low last summer. Prospect's income potential, which is based mostly on private debt and private equity interests in companies ranging from candle manufacturers to specialty finance firms to media and IT service providers, is the primary attraction for dividend investors. Prospect has reasonably steady revenue and consistent monthly dividends with a great return, as these assets pay out across a well-diversified collection of properties. Prospect Capital Corp's top analysts have a consensus price target of 6.00 for the next 12 months, with an upper figure of 6.00 and a low estimate of 6.00. The median forecast is down negative 29.08% from the previous price of $8.46. Prospect Capital Corp stock is currently being sold by 2 financial analysts surveyed. This rating has been constant since June, when it was downgraded from a sale. Number 4. AGNC Investment Corp.
It's a large set of mortgages that are combined together into basically an asset that the company can buy. So investors may be more interested in
AGNC is a right or real estate investment trust, which means that it may avoid paying certain corporate taxes by distributing 90% of taxable earnings to shareholders. Rather than managing homes, the company invests in residential mortgage pass-through securities and other mortgage-related assets guaranteed by government-sponsored enterprises like Fannie Mae and Freddie Mac. While the government's involvement carries some risk, it's an essential backup for these house loans and gives AGNC investors some peace of mind. Shares are up approximately 21% year-to-date because of a strong housing market and rising interest rates, but income-oriented investors will be especially happy with the substantial 12-cent monthly dividend. The firm, which is based in Bethesda, Maryland, has its broker-dealer subsidiary Bethesda Securities Corp., which gives it direct access to Fixed Income Clearing Corp., which is a plus when it comes to efficiencies in what can be complicated behind-the-scenes machinations in these types of investments. This is reflected in an operational expenditure structure of roughly 0.8% of total equity capital, according to AGNC, making it one of the lowest cost structures in the residential mortgage right market as a proportion of shareholders' equity.
To thank you for watching this video, we're offering you an absolutely free training webinar. How would you feel knowing that you could pay every bill you have right now as well as any future bills that come in? Commission Hero is a proven system that has helped over 8,000 people earn upwards of $1,000 a day or more. The best part is that there is zero experience needed to get started. In this free training, Robbie Blanchard and his team will teach you the top 3 secrets to how and why this system works, and how it can also work for you. Join the thousands of people who have found success and financial freedom using Commission Hero. Right now, the first 100 people to use the link below will get access to this free webinar. Now let's get back to the video.
Number 3, floating rate capital at Pennant Park or PFLT. Pennant Park is primarily a lender to subprime middle market companies who have poor credit ratings and must pay a higher interest rate to compensate for a higher risk profile. PFLT mitigates this risk for shareholders by performing thorough research before releasing any debt and then focusing on a system that makes it a fund lien loan, which means it's paid first to shareholders in the event of a collapse. Pennant Park is a BDC, which stands for Business Development Company. It primarily deals with debt financings such as first lien secured debt, senior notes, second lien debt, mezzanine loans, and private high-yield debt. It focuses on loan investments in middle market businesses. It also invests in preferred and ordinary stock to a lesser extent. The company's portfolio is extremely diversified, with no single industry accounting for more than 8% of the overall mix, and the great majority accounting for less than 3%. The icing on the cake is that its hovering loans have interest rates that fluctuate with the market, meaning that borrowers with these loans are paying significantly more PFLT now than they were in 2020, even though their loan structure hasn't changed. Pennant Park stock has risen almost 20% year to date as a result of the exchange rate trend, but the monthly dividend payer's yield solely makes it worthwhile to consider regardless of short-term market movements. Number 2, Gladstone Investment Corp. Gain.
A little bit different. They have a different profile here. So Gladstone Investment Corp is a business development company.
Gladstone is a business development company, or BDC for short. This form of publicly traded firm functions more like a private equity fund or a hedge fund than a traditional corporation, investing in other businesses through debt and stock holdings and then sharing their successes and failures. Gladstone specializes in middle market buyouts. In other words, they are firms with revenues ranging from $20 million to $100 million that are modest enough to be purchased quickly but not inconsequential. Brunswick, a bowling equipment firm with a strong brand but somewhat limited industry, is one of its notable investments. Gain can maintain consistent monthly dividends by carefully selecting assets like this, and as a bonus, the stock is up 42% year to year on outstanding performance. During the first quarter, there hasn't been any movement in the Gain stock. Hedge fund attitudes remain steady in general. At the end of the first quarter of 2020, the stock was in the portfolios of 8 hedge funds. To interpret hedge funds as viewpoints, you must look at more than just the amount and change in hedge fund popularity. Even if a stock's popularity rises, it may still be less popular than similar priced stocks. Number 1, Horizon Technology Finance Corp. Or HRZN.
Once he grows, this won't be the best growth stock to invest in because you see here, it goes down, up and down, but it's been consistent.
Horizon specializes in giving finance to the technology industry, as its name indicates. Its investment portfolio now includes a diverse variety of pharmaceutical and healthcare technology firms, indicating that it isn't only focused on digital marketing or big data. One of them is Mustang Bio, a biotechnology company focusing on creating genetically modified therapies for uncommon tumors. Horizon's varied strategy serves to provide some stability to these development stage pharmaceutical companies, which can be highly risky investments on their own, as seen by the company's hefty 10-cent per share dividend, which is paid on the dot every month. Horizon is leading a venture finance platform that provides structured loan solutions to life science and technology firms smartly and creatively. Horizon has been providing loan financing to some of the most interesting firms for decades thanks to its seasoned team of investment and operational specialists. Horizon's members have together created and invested over $5 billion in venture investments to thousands of businesses. Horizon has generated and funded more than $2 billion in startup loans to more than 250 developing businesses since 2004. Horizon supports the enthusiasm of its portfolio businesses and their resolve to overcome any hurdle to success thanks to its sector experience and demonstrated reliability as a funding source, as well as its long-standing contacts in the private equity industry. So do let us know in the comments below which of these monthly dividend stocks you're looking to buy right now, preferably before the crash. Whatever your answers are, do remember to hit that like button to show us your support, and if you want more content like this going forward, then don't forget to subscribe to our channel and make sure to smash that bell icon. And as always, I'll catch you guys later in another video. Bye now!